The comments came from Robert Lighthizer. I think it would feel a bit more directional. The truth is that Secretary Mnuchin has been very positive all along the way, and it hasn't necessarily panned out to the extent that the market got excited about his comments.
Sure. And I know that there's been a lot of, we rallied even this morning on these comments. We're very sensitive to this. Barry, what happens if there's no deal? Or I guess we can imagine that the markets wouldn't like that. But what happens if there's a deal with no real teeth to it, with no real enforcement? Are we just going to get a sort of a sugar high rally? But what have we really gotten in the long run?
Well, I think the market is looking at this kind of like a horse race, and it's betting on a trifecta. One is that the trade deal will get done, also that we won't have a recession, and that interest rates are going to come down, those three things. And so if they don't happen, then that would be negative news. I think a deal with China is priced in. And to be honest, with earnings being as poor as they are and CFOs being as worried as they are, almost half of them expect a recession in the next year. We would tend to say it's better to be prudent right now, not be overly committed to the market, because this could fall through.
Yeah, but they're always gloomy, those CFOs. You know, that's their job. They got to offset the CEO hopium, Barry, right? Listen, you have a couple of picks. Despite the what you're laying out here,
yeah,
you're not necessarily saying it's a bad time to be in the market. So you say Molson Coors, Travelers, Verizon. You know, why these kinds of names?
Well, in our fund, the Golden Rainbow, we like to buy companies that are relatively cheap and have good earnings, and have been rising in price. And these all kind of meet that criteria. They're more stateside focused. They're in some cases buying back debt or buying back shares. And, obviously Verizon being more the utility with a really nice yield. So you can kind of hold them regardless of which way things go with China.
Yeah, and Alicia, you can get a 4% dividend yield on Verizon right now, or 2% on the U.S. 10-year, and basically be penalized for holding any other type of global sovereign debt right now.
That's right, which is why it's ultimately where yields are. It's ultimately positive for the market. So it's true that there's serious event risk ahead of us in the next, let's say, 4 to 6 weeks. But with yields here and probably going lower, because if you look at it technically, yields are probably going lower, there really is nothing else but equities. And there is an argument to be made that there's a sea of liquidity coming here. With the
sea of liquidity coming?
Coming. With the Fed, first of all, financial conditions are easy. We've just seen a 40% increase in mortgages year over year, right, because rates have come down, mortgage rates have come down. And on top of that, the market's expecting 2 rate cuts at least by the end of the year. With that, you're going to ease global financial conditions, and it kind of is a nice setup for equities here, even with the market expecting a trade deal.
The only sort of item in here that nobody seems to be expecting is an improving economy. Barry, do you think that's fair to say? I mean, what happens if the data shakes this off, if the third, fourth quarter isn't as bad as everybody seems to think?
Well, that would be very good for the market because, earnings are probably going to be about zero this quarter. They weren't much last quarter.
Right.
And yet the market is, running. But it's a strange thing right now. The generals are what's running. The big caps, as was mentioned just previously. The smaller stocks are in the tank. They're not anywhere close to reaching, a new high, and they've been down in the last couple of months. So we need to see the small guys come along. And if the economy recovers, it will be the small guys that benefit the most.